Welcome back to Daily Dough, your go-to channel for mastering smart money moves and financial confidence. If you're new here, consider subscribing so you never miss a chance to grow your financial understanding and take control of your future. Today we are diving into a topic that everyone hears about but few understand clearly: Bitcoin. What is it? Where did it come from? Why does it matter in your everyday life? Let us take a closer look. Imagine a form of money that does not come from a government, is not printed by a bank, and exists entirely online. Now imagine that people around the world are using this money to invest, save, and even pay for everyday things. That is Bitcoin, and we are about to explore everything you need to know, especially if you are just getting started. Before we continue, remember this. This video is not about hype. It is not about speculation. It is a clear, step-by-step breakdown to help you understand Bitcoin's foundations, how to use it safely, and why it may be part of your financial future. Let us begin with its origin. Bitcoin was created in 2008 during a major global financial crisis. A mysterious figure or group using the name Satoshi Nakamoto published a white paper that proposed a new kind of money, one that did not rely on banks or governments. In 2009, the first block of the Bitcoin blockchain was mined. This marked the official beginning of the Bitcoin network. Think about that. At a time when trust in traditional institutions was crumbling, a decentralized alternative quietly emerged. Now what makes Bitcoin different? At its core, Bitcoin is decentralized. This means no single person, government, or company controls it. Instead, it operates on a network of computers spread all around the world. These computers, also called nodes, help verify and record every transaction. The underlying technology behind Bitcoin is called blockchain. A blockchain is a digital ledger, like a notebook that everyone can see but no one can erase. Every time someone sends or receives Bitcoin, that transaction is added to the blockchain. Let us pause and consider. Because of this system, Bitcoin is incredibly transparent and secure. No one can secretly change a record, and since the system is public, anyone can verify its accuracy. Now let's talk about mining. Bitcoin mining is the process that keeps the blockchain running. Miners use powerful computers to solve complex puzzles. When they solve one, they get to add a block of transactions to the chain and earn Bitcoin as a reward. This process is called proof of work, and it is what keeps Bitcoin decentralized and secure. Let us take a closer look. This mining process is not just about rewards. It also ensures that transactions are verified in a way that is difficult to fake. That is why it is often called trustless. Not because it is untrustworthy, but because you do not need to trust anyone. The system itself guarantees accuracy. Let us shift gears and talk about wallets. To use Bitcoin, you need a digital wallet. Think of it like a banking app, but instead of holding dollars, it holds Bitcoin. There are two main types of wallets: hot wallets and cold wallets. Hot wallets are connected to the internet. They are convenient for quick access, but they are also more vulnerable to hacks. Cold wallets are offline, usually physical devices that store your Bitcoin without any internet connection. They are ideal for long-term storage. Let us pause and consider. Every wallet has a private key. This is like a secret password that proves you own the Bitcoin inside. If you lose this key, you lose access to your funds. That is why securing your wallet is critical. Some people even write down their private keys and store them in a safe place, like a physical safe or a safety deposit box. Before we continue, remember this. In the world of Bitcoin, you are your own bank. That means you are also responsible for your own security. Let us now explore how to buy Bitcoin. You can buy Bitcoin on exchanges, online platforms that let you trade traditional money for cryptocurrency. Popular exchanges include Coinbase, Kraken, and Gemini. You create an account, verify your identity, link your bank account, and then buy however much Bitcoin you want. You do not need to buy an entire Bitcoin. You can buy small fractions. The smallest unit of Bitcoin is called a Satoshi. 1 Bitcoin equals 100 million satoshis. Think about that. That means if Bitcoin is worth $20,000, you can still buy $5 worth of it and receive a tiny piece. Now once you buy Bitcoin, you can leave it in your exchange wallet. But that is not the safest option. Many people move their Bitcoin to private wallets they control. Peer-to-peer platforms are another option. These allow individuals to buy and sell Bitcoin directly. Bitcoin ATMs also exist in many cities. You insert cash and receive Bitcoin in your wallet. Let us take a closer look. No matter how you buy Bitcoin, always double-check the platform's legitimacy. Scams and phishing sites are common. Always enable two-factor authentication and use strong passwords. Security is crucial. Unlike a bank, there is no forgot my password option in Bitcoin. If your private key is stolen or lost, your funds are gone permanently. Let us move on to value. Why is Bitcoin worth anything? First, Bitcoin is scarce. Only 21 million will ever exist. This fixed supply makes it resistant to inflation, unlike traditional money, which governments can print endlessly. Second, Bitcoin is decentralized and censorship resistant. No one can freeze your account or block your transaction. Third, Bitcoin is portable. You can send it across the world in minutes, without banks or borders. Let us pause and consider. All these features make Bitcoin attractive to people who want financial freedom, privacy, and control. Some view it as a store of value, like digital gold. Others use it for remittances, online purchases, or simply as a hedge against unstable currencies. What does that really mean? It means Bitcoin is both a technology and a movement. It is about more than money. It is about changing the system. Of course, Bitcoin is also volatile. Its price can swing by thousands of dollars in a single day. This is because it is still a young asset and heavily influenced by speculation, news events, and market trends. Let us pause and consider. Volatility can be scary, but it also creates opportunity. Long-term investors often use strategies like dollar-cost averaging, buying a fixed amount on a regular schedule, regardless of the price. This approach smooths out the impact of short-term ups and downs. Others hold Bitcoin for the long haul. They are often called hodlers. This term originated from a typo in an online forum, but it came to mean hold on for dear life. Think about that. These holders believe that Bitcoin's long-term value will far outweigh any short-term dips. Let us now discuss regulation. Bitcoin exists in a gray area. In some countries, it is fully legal. In others, it is restricted or banned. In the United States, Bitcoin is legal and considered property for tax purposes. If you sell Bitcoin for more than you paid, you owe capital gains tax. If you receive Bitcoin as income, it must be reported. Let us pause and consider. Understanding the law is essential. Regulations can affect how you buy, sell, and report your Bitcoin. Stay informed and consult a tax professional if needed. Governments are still figuring out how to deal with Bitcoin. Some embrace it, others fear it. But the truth is, Bitcoin cannot be banned completely because it lives on a decentralized network. Even if one country bans it, the network keeps running globally. Before we continue, remember this. Bitcoin is permissionless. No one can stop you from using it, as long as you have access to the internet. Let us shift to adoption. More companies are accepting Bitcoin as payment. Payment processors like PayPal and Square support it. Retailers, airlines, and even charities accept Bitcoin. Large investment firms are also entering the space. They see Bitcoin as a new asset class. Let us take a closer look. Publicly traded companies like Tesla and MicroStrategy have added Bitcoin to their balance sheets. Major banks are offering crypto services. Pension funds are exploring exposure. This institutional interest adds credibility, and it signals that Bitcoin is here to stay. Think about that. Bitcoin has moved from a fringe experiment to a mainstream conversation, but there are still concerns, especially about the environment. Let us address that next. Bitcoin mining uses a lot of electricity. That is a fact. But where that energy comes from matters. Many mining operations use renewable energy, like hydro, wind, or solar. Some even use energy that would otherwise be wasted. Let us pause and consider. Comparing Bitcoin's energy use to that of the traditional financial system, which includes banks, servers, and cash logistics, gives us perspective. Still, there is room for improvement. Innovations like more efficient hardware and renewable incentives are helping reduce the impact. Before we move on, remember this: Bitcoin's energy use supports a secure, decentralized system that anyone can access. Let us explore real-world use cases. In Venezuela, where inflation has destroyed the national currency, people use Bitcoin to protect their savings. In Nigeria, Bitcoin enables access to global markets and supports families through remittances. In Ukraine, crypto donations have supported humanitarian aid. What does that really mean? It means Bitcoin is more than an investment. It is a lifeline in places where traditional money systems have failed. Let us now look at how you can get started. First, educate yourself. Watch videos, read books, and follow trustworthy sources. Second, start small. Open an account on a reputable exchange. Buy a small amount and experiment. Third, secure your assets. Learn how wallets work. Store your Bitcoin safely. Think about that. Knowledge is power. The more you understand, the better your decisions. Finally, decide your strategy. Are you investing long-term? Trading? Using it for payments? Each use case requires different tools and approaches. Set goals, create a plan, and stick to it. Let us pause and consider. Bitcoin is not magic, it is a tool. And like any tool, it depends on how you use it. Let us wrap up. Bitcoin is digital, decentralized, scarce, and secure. It challenges the old system and gives individuals new power. It is not perfect, but it is resilient. It has been declared dead hundreds of times, and it keeps coming back. Think about that. You do not need to understand everything today. Just take the first step. Learn, experiment, ask questions. Thanks for watching Daily Dough. Do not forget to like this video, subscribe to the channel, and share it with someone who is ready to start their Bitcoin journey. Until next time, keep learning, keep growing, and keep stacking that knowledge.